Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Close Show. As always, Scott Carson, excited to be here with you today. And in this special episode, we're going to be talking with somebody who, in his first 6 months as a note investor, well, no, he's been around notes and other things much longer, but let's just say this in his first 6 months as a note investor on notes in the United States, he's starting to make some noise. And at first, when you hear his name, you may think he's this famous hockey player from north of the border. And while he shares that with somebody, he is slinging goals and slinging pucks and taking down some deals. That's what he's doing. So we're honored to have our buddy, our friend from north of the border, a passionate investor, a passionate capitalist, a father of two kids, somebody who spends his times in Florida when it's too damn cold in Canada, is our good friend Phil Brodeur. Good morning, Phil. How you doing today, buddy?
I'm doing great. How are you, buddy?
I'm good, man. I'm good. So tell everybody who's listening here, kind of, I mean, you've been an investor for 6 months, but let's talk kind of about your path into being real estate because you're doing stuff in Canada before we were talking. So kind of talk
Yeah.
about your entrepreneur journey.
Okay. Well, I started real estate in 2012. I started off with it's called rooming houses, right?
Hmm.
It's the probably the lowest rung on the ladder of real estate, and I I started. It's it's big like a triplex, but
Yep.
it's all separated with every room has a lock on their door and they share a bathroom and a sink.
So it's kind of like
And
student housing then here in the United States where everything
yeah,
shares. They have that around a lot of the
yeah,
universities. Okay, nice.
yeah. So I've built a portfolio of about 60 units, 60 and spread across three buildings in Montreal.
Hmm.
And and over the years we've run the business and cash flowed the business for about until 2019. In 2019, we started selling off those assets because it was getting too much I had too much management, too much small issues that I didn't want to deal with anymore and wanted to level up.
So what were
And
those issues? A lot of cases was just people not getting along with each other. Or you an adult
well, yeah,
babysitter?
because I mean, people are crammed up in there. Like, let's not joke about it. I mean, it's the truth. I mean, but that's all they could afford. I mean, you know, so it's better than live in a room than be on the streets. So
Amen.
so we provided that housing. I mean, it was a tough business to get in because they get a lot of them, like, they get their checks from the government. So you have to be there on the first to make sure it doesn't end up in someone else's pocket. So
So are you saying you were a slumlord or just that you dealt with people?
yeah,
I
I
don't
mean,
mean
I'm
that.
not. I mean, you got to start somewhere. So I mean,
Yeah.
if it made me a slum warlord back in the day, then so be it. I
Well, I
can't do
don't mean
anything
that.
about it.
I don't. I don't.
I always knew I wanted to level up
Yeah.
and do greater things. But if I have to start there, like, I
Well,
can
first
do
of
a
all,
dirty job and
right.
get over it.
Yeah. Well, no, I joke. You
Yeah,
weren't a
yeah.
slumlord. You were dealing with people, that were going through things, but providing them a
Yeah,
place to
yeah,
live,
no,
which is
but
great.
as a landlord,
He's
I think, I have a biased opinion, but I maintain my property and
there. You go.
I got top dollar for those properties when I sold them. I mean, they weren't run down like so many others are because
Sure.
the clientele is rough on the on the real estate. They don't care. They have no skin in the game. I mean, they move in with a couple of garbage bags. They move out with a couple of garbage bags. There's no recourse. They use the law against the landlord, but it's okay. Like, I've moved past
Sure.
that stage because I was tired of toilets, tenants, and trash. Essentially, that's why I
Yeah.
moved on, and I knew I didn't want to do that all my life, and like, it's just
You
it's
just
good
leveled
cash
up.
flow wise.
Yep. Yep.
Yeah, so I leveled up. And then because I saw an ad like become a private lender, and I was like, oh, and then the quote that attracted me was okay, become a private lender, um, earn three times as much as you would like in a at the bank, So it was like 10%, 12%. I was like, wow, that's amazing. I mean, tell me about this opportunity. So I went to a little Thursday night 1 hour demonstration, and I was like, wow, this is really good because we've accumulated a lot of equity
Mhm.
uh, in our assets. So I was like, okay, so we can sell one off, and then we can put it to work, and we make just as much, and we just make one loan, and it just pays every month. I mean, it's much better. We don't have to deal with the tenants. We don't have to deal with the trash. The owner is, but as the bank, I'm making. I was making more money being a lender than a landlord. So I figured, why not?
Amen to that. Amen to that.
So I became a lender in Canada, and I've closed and fully closed on 70 deals. Like the money went out, the money came back in. I did about 70 deals in the last 5 years, and it's been a great business up in Canada. I mean,
Right. Can you share
it's
with folks that are listening here or watching this how it's a little bit it's different in your neck of the woods?
yeah,
Here in the United States, we're used to 30-year mortgages. You
yeah,
know what I mean?
yeah,
Or hard money loans are 12 months. 12% usually give a couple points there for you.
yeah.
How is it different up there? It's shorter term stuff for the most part, right?
Yeah,
In
as
most
a as
cases.
a private lender in Canada, you're for a first lien, it's about 12%. Depending in the greater Montreal, in a larger area where there's a lot of people, it's around 12%. If you go out in the boonies, well, for sure it's more expensive. But around Montreal, it's 12% for a first lien. You got 2-3% for the fees, and it's a 1 year term, interest only. So it's usually for the people that are in between stuff that want to buy and flip, rehabs, that kind of stuff.
Now,
You get
now
there
how's it for longer term holds? What's the longest term most folks have up there? If it's not an investment fix and flip, like you're using it for mezzanine, like you said, short term financing where they're
yeah.
flipping or stuff like
Well,
that, or rehabbing.
for as long as they want, really. I mean,
Okay.
because every year there's a renewal fee there's like a 1% renewal fee. So if they want to keep the money and they want to renew, it's fine. I mean, but it's interest only.
Very nice. Very nice.
So.
So so basically you're doing one loan a month on average. If you did 70 in about 60 months, you're doing 1 to 2
Yeah,
loans
well,
per month.
I've pulled back on the loans in Canada because I've started to expand in the US, but yeah, so I have like 15 deals in the US going on right now. Um, so yeah, I'm about 85 deals, 80 loans total now. So
Very
I'm starting
nice.
to get a little bit of experience and know how the game is working out.
Right. What's been so on those 15 deals we're talking about, you've bought notes here in the United States. You're at about 15,
Yeah,
14,
I
15
bought
right now.
no, yeah, because I can't originate loans in the US. There's all sorts of compliance and licenses that you need, which I don't have. So I figured I wanted the quick way to get in the business. So buying already originated loans in the US was probably the best way. So I reach out to banks, to hedge funds, the private investors that list their assets for sale, and yeah, I pick I pick the best notes. So I get like we call it a tape. It's like 100 assets, 200 assets in a on an Excel spreadsheet, and then I check them out. Like I pick the best states for lender friendliness, the right range for the dollar amount that I can close on. Um, and it's just picking the best yield really for out of all those assets. Sometimes it hits, sometimes it doesn't. But the key is really to do a lot of marketing to get as many deals in front of you as possible. So you pick and choose the what's really going to pay out.
Right.
And
You
that's where you really came in, right? And with you're really good at marketing and getting putting yourself out there and letting everybody know that you're buying notes and it's been really working out for you. And it's the same recipe has been working out for me fine. I mean, it's good.
you'd
Now
be
I'm more in
surprised.
now I'm
Go
more in
ahead.
the fundraising aspect of things because eventually nobody, regardless of who you are, I mean, you're gonna run out of money, you know. So that's when you need to onboard investors, and that's where I'm at. And yeah, I've been working on that too, and so far so good.
Yeah. You bought out of your 15 notes that we've put
Yeah.
in front of you, and this is, I know the answer, but for those out there listening don't. Are you targeting more performing or non-performing or a mixture of both there for you, Phil?
I like non-perf, but I have a mixture. I mean, I'm mostly non-performing, but if there's a good performing note out there that's just waiting for me to be scooped up, I'll pick it up, no problem. It's fun to always have money coming in every month to pay your fixed costs. So I'll have a little bit of performing stuff and sprinkle it with non-performing for the those really big home runs.
Right. Now you've got your first note was a duplex, it was an owner finance note, if I remember correctly, in Michigan, right? In
That's
Detroit.
right. Yeah, yeah,
And it was an investor that owned it.
yeah,
And I know this because we've been talking about it lately.
yeah, yeah.
And they stopped paying because one of the tenants stopped paying. They didn't have very good property management, if I remember correctly. Like he said that the one of the tenants in the duplex hadn't paid in like 6 months.
Yeah, yeah. I was like, how can you tolerate that? Like, you're gonna go under, and then that's like she didn't want to screw her credit, so I spoke with her and we made an arrangement, and then she signed me a deed in lieu of forfeiture. So instead of going through the whole legal process and wasting years, well, not years, but like
Some
so,
months for sure.
yeah, oh yeah, like a good 6 months, like may as well just figure out a deal and shake hands and be on our merry way, and I can move on quicker, and time is money, so the
Yeah.
less time I'm stuck waiting for it on a judge to issue a judgment and paying lawyers, that's worth something, that's for sure, so yeah, I mean, so I've taken over a property worth, well, she had it listed for 85, but because of her non-paying tenant, she had a hard time finding a buyer. So I'm gonna remedy that problem. And I bought that note. It was the note was worth 60 grand. The value of the property is about 85 when it's properly rented out. And I bought it for 37.6. I bought the
Hmm.
note.
Now it's a
So
contract for deed, if I remember correctly.
contract for
Contract
deed. Yeah.
at like 9 or 10%. Right?
Yeah, it was. Yeah, at face value, the note was already a good, decent yielding note. I mean, but um, yeah,
Yeah.
it's her tenants that aren't paying, so it's been a problem for her, and she because she put like not enough down payment, and she bought too many, and then when you're a new landlord, you get overwhelmed by all those problems that you've never seen, and if you don't have somebody to help you out and deal with those issues, you're because I've been through that problem, when I have
Yeah.
my 60 units and you have all those issues every day, your phone rings and you look at it sideways and you're like, oh, come on, like another issue, the janitor is telling you, oh, there's this, there's that, and it's never the the it's
It's
never
never
good
good
news.
news. It's never good
Never
news
good
with
news, right?
it. So you said, how much did you pay for this note again? 30.
37.6.
And now you own a property that's worth conservatively 75 and above on the
Oh
low
yeah.
end.
Yeah,
Yeah.
on Zillow it's right at 85. Yeah.
Yeah. Yeah. Just being conservative because there'd be some closing costs, stuff like that.
Yeah,
So,
of course.
and
Yeah,
you're
I'm in the
gonna
money.
are you gonna hold that for cash flow? You're gonna try and sell the asset. What's your
Well,
plan?
I like cash. I mean, that's why I'm in the note business. It's a beautiful business because it's cash for cash. As I don't have to provide the housing. I don't have to provide it, anything except the cash, right? And you just respect the contract, and that's it. But uh, I'll have to go through the real estate part of it. So I'll have to probably evict, flip, like refurbish the inside of the apartment,
Hmm.
put in I don't know, 5 grand, and then put in a Section 8 or other tenant, and then I can get the full market value for the property. And in the meantime, I can wait for my buyer because it's cash flowing.
Yeah. Yeah. You've got one tenant in there, it's paying. The other one, it
Yeah, so
hasn't
it
been
covers
paying.
the one that's paying covers the fixed costs, and the other one, well, what are you going to do? Like, we'll
what was funny is that they were behind by 6 months, and now once the sale went through, he made a monthly
Yeah.
payment.
So yeah, well, yeah, trust me, I won't be dealing with this too long.
Now, what's been your biggest surprise? I mean, we went through it. I love working with people that are coachable. Phil's one of the most coachable people, takes action, takes action. But I also know that you get a little frustrated that it's a lot of times hurry up and wait on people, right?
Yeah. Yeah, I mean, well, it's like anything. When you're dealing with the lawyers are dependent on the courts and the court dates and the judges. They postpone the hearing, and any reason is good to give the borrower more time. And but that's why I choose lender friendly states. I mean, I don't go to New York or California. It's I don't want a foreclosure to take 5 years. I can't afford it, to be honest.
Yeah.
Like it makes no sense to deal with those properties unless you pay 30 cents on the dollar. Then maybe, right?
Right. Right. Now
And you have
you've
to
also
pay.
now you've got stuff that's performing. You've got some stuff that's
Yeah,
not performing, and then you've also some stuff like you have that Indiana asset where you went to foreclosure, and then the borrower filed bankruptcy on it and submitted a
yeah,
payment plan. How's that working out?
yeah. Well, that's gonna delay things another year. But what are you gonna do? Like it's part of the game. And if if they can figure it out for themselves in that year, then good for them. Like if they sell the property and pick up the equity that's left in their property, and good for them. But
Well,
a
but
lot of people,
it'll be a good it'll be a win-win. It'll be a win
yeah,
if they sell. It'll be a win because what you're owed on that note, you bought it at a good discount
yeah,
as well. You
yeah.
know, if they don't follow through on the BK plan and you end up foreclosing on it, and
Well, that's it.
yeah,
Like I mean, at some point it's got to stop. You can't just kick the can down the road. And but I mean, I've bought loans that haven't been paying in 12 years. I mean, like but you have to buy them at the right discount and make
yeah,
sure you can foreclose, and like there's a lot of patient lenders out there. But
yeah,
like at my level, I can't be patient forever.
no, no. Well, that's the thing is that some folks who you've bought stuff from had some good stuff. They've had some stuff that was delayed because they were more focused on their performing stuff, or also basically kind of their one foot out the door to retirement in a lot of cases too.
Right.
With our buddy there out of Indiana,
Yeah.
what has been the biggest learning curve for you as an not only as a kind of a newer non-performing note investor, but also somebody from outside of the United States? What's been the biggest two or three things that if you've had to learn or had trouble with?
I'd say the legal aspect of things, because every state is different. Every state has different laws. So, but I had a pretty decent idea of what I wanted,
Mhm.
you know. So, but yeah, the legal stuff, because they all have different wordings for the same step in different states. So, yeah, the legal stuff. But I'm learning as I'm going.
Yeah, you're doing good. You've got some bumper bowlers, that's it kept you out of some bad
Yeah,
deals, or don't go do this in that state. Like you said, don't go buy in California, go buy in New York, stuff like that.
yeah,
Yeah,
yeah.
we've had some fun going through that. And I mean, you've made a bunch of offers and you closed on 16. There's stuff that you've gotten approved that you end up going back and canceling because of due diligence issues.
Yeah, I mean the if the file isn't clean, I mean I don't want it because I'm going to be stuck with your issues. So
Yeah, yeah.
I just had to let one go, not because it was a bad property, but like the addresses don't match. There's a missing assignment in
Assignment.
the in the
Yeah,
in, in the chain. So I mean, not worth my time. I mean, it's going to be an issue to foreclose, and you don't want to give your lawyers extra work to try to dig you out of that hole.
right. Now, one of the things that we talked about early on was also the issue of investing in the United States versus investing in Canada, and if you had to move the money back there. You guys kind of have a double taxation aspect being a Canadian
Oh
investor. Is
yeah,
that correct?
yeah. You need to have even before, because we spoke. I don't remember exactly when we spoke, but I was like, okay, this is what I'm gonna do in the US. But then I was like, okay, I'm now it's a cross-border business. It's gonna be I can't just if I just open an LLC, it would result in double taxation. So it would result in a 67% total tax on your profits. Like, well, that doesn't make much sense. So I've set up the right entities so it flows through and to investors, and so there's no tax implication for international investors.
Yeah. That's the smart thing is making sure
Yeah,
your LLCs and
it's kind of a reverse engineering because at the end I knew I didn't want to pay double tax. So even before, because the profit is paid off at the end of your business, right? You don't pay
Mhm.
yourself first. I mean, you pay yourself when everything closes and you make money. So at the reverse engineer, okay, well, what kind of business do I need so I don't have to be double taxed? So yeah, so I've set up a limited partnership and it's been great so far. I
Very
mean,
nice. Who'd you use to set that up?
Laughlin out of
Laughlin.
Nevada.
Yep.
Yeah,
Guys, who I thought you said you used, but you're not the first Canadian investor who's wanting to invest in the United States, especially in note
yeah,
stuff. We got some others. You talked with, Cal and a few others out there, and so that's why we love, Laughlin works with a variety of international investors looking to invest in the United States and making sure everything's set up properly there for you, which is great.
yeah,
Now you mentioned earlier about the capital raising side of things. Now you funded a lot of these deals with your own capital, your own profits, as you
yeah,
mentioned, but you're taking steps now to put a fund together, do some other things. I mean,
yeah,
we put you in touch with a couple, with Todd and a few others out there too to talk to you.
yeah, yeah. So we're doing what's called structured notes. So that's where the investor would make a loan to my LP, and then with my LP, I invest those funds, and then I distribute on a monthly basis the interest to the investors. So yeah, I mean, it allows anybody, U.S., Canadian, Mexican, wherever you are,
Uh-huh.
to take part in those nice profits. I
Hmm.
mean, for like a 1 year term, we're talking about 8% for a 2 year, around 10, and a 3 year it goes up to 12%.
Hmm. And the great thing is that you're finding deals that will pay that and
Oh,
then put
oh yeah, absolutely.
plenty of money in your pocket too for you. And part of
Yeah.
it with that increased interest rate on the increased term, that gives you a little bit more flexibility to
Oh
get
yeah,
in, do some stuff, whether it's not that you'll be buying in longer foreclosure states, but states that are at 12 months or less to foreclose if you have to do that so that everything's taken care of, correct?
yeah, yeah, yeah. Because it's rare that you get a property that's been foreclosed on that's in perfect condition. I mean, you're gonna need a coat of paint, sand the floors, or redo the carpets, that kind of stuff. So that stuff is gonna take time. I mean, not too much time. It's not a big job,
Yeah.
but uh,
But you've got to
yeah,
figure that in if you don't end up keeping the proper, the borrowers in the property. Now, you're not opposed, like you said before, having performing notes or
yeah. So they're
pre-performing
performing,
stuff.
and I mean, they regardless of what they choose to do, whether they reinstate and put their loan back on time, or they sell, or I'm in the money every time, So it's
Yeah.
always I
And I love the,
anticipate, yeah,
go ahead. I didn't mean to cut you off. Go
yeah.
ahead.
I just make sure that the numbers work before I get into any deal.
Yeah. Well, I love it too that your threshold that you start looking at stuff makes complete sense. You're looking at that, 15, 16, 17% cash on
Yeah,
cash return
that's
for
how
you.
I can pay 8, 10, 12.
Yeah.
So if I made any less, then it wouldn't work out.
No, no, and you don't want to do a skinny deal either. We've talked
No.
about that as well. Like, no, that doesn't make any sense to do a skinny deal.
Yeah.
And what's great is too is that you've when you got started, you bought some low balance notes just to kind of get your feet wet, right?
Yeah. Well, yeah, of course. I don't want to, yeah, I don't, I didn't put the big chunk down on the first deal. I mean, yeah, but hey, it turned out really good, my first deal.
Yeah,
So,
it sure did. But you've started to, I won't say mature up, but kind of grow to a little higher valued assets, a little bit stuff, a
yeah,
little higher balances now that you've got it
yeah,
down and dealing with servicing companies and attorneys and then,
yeah.
local folks. Therefore, you're putting your team together. What are your favorite states right now to buy notes in for the most part?
I like Indiana.
Mm-hmm.
Indiana. North Carolina, that's been good to me. Michigan, Michigan
Hmm.
has good stuff in there.
Hmm.
Um, I have a few in PA, and that's it. I have one in Illinois.
Yeah. Not Cook
That's
County. Not Cook
not
County.
not. Yeah, yeah. This one it's almost done. That's why I bought it because it was right at the end of
Yeah, it's a
the whole
lower balance.
process. Yeah,
Yeah.
so the sale has been confirmed. So we're right at the end of the legal process.
Oh, sorry, it's not a low balance. It's basically because it was near the end of the foreclosure process in the next
Yeah,
90 days. Yeah, yeah, yeah. That's
yeah,
right. That's right. I
yeah.
forgot about that one. Now you mentioned marketing earlier on. What are some of the things that you've been implementing to market for deals or to market for capital, Phil?
Well, you have to build credibility. So we've built our LinkedIn, we've built a website, we've built marketing material. Like you're gonna send them a teaser, the pamphlet, and you need to have you have stuff on there, right? So we've built that, and then we've pulled IRA investors, SDRA investors out of county records. So we're doing an email blast to these guys. So I've picked up about 1,200 SDRA investors. So yeah, and I'm working with Todd to set up um, my industry fintech account
Yep.
so we can manage multiple investors so they get their monthly statements. It takes care of the compliance, all the back end. It deals with the all the questions investors may have. Um, so it really automates stuff. The servicing has been great. Um, it's taking care of all the payoffs, and I don't want to self-service. I'm self-servicing up in Canada, and I mean it's worth the price that I'm paying to have all those problems dealt with.
Hmm.
Yeah.
On your loans in Canada, what's the average dollar amount on the loans you're doing up in Canada?
100, 150,
And then
goes
what's the average?
up to 500.
Okay. And then what's
Yeah.
the average note that you've bought here in the United States, give or take a little bit? I know you've had some lower bump, but if you kick out the lowest one, what is it? 50K, 35K, 100K? What is
Well,
it?
I'd say, well, I'm looking at it right now. It's about like 200,
Okay.
the average note. Yeah. To I have small ones. I have a few small ones and a few big ones.
Hmm.
Yeah,
Now
around two hundred.
you also have a home here in the United States down in Florida, right?
Yeah, 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 yeah. Because I saw where I see where the country's going. So I mean now let me have a plan B here. Like
Well,
so
I mean,
so.
you can very easily here in the next year be the 51st state of the
Oh,
United
I
States.
mean, what a joke! Like
I know
seriously,
that's not going to
like
happen. I know, but
I
it's
mean,
funny.
you guys have a troll president. He likes to he likes to troll people
He likes to school people,
and
doesn't
they
he?
and what you have to understand is that if there's a troll you can't bite and like and get mad. He's making fun of you, so you have to laugh with him.
Yeah.
You have to tease him back. That's how you deal with it. But these guys, they take themselves too seriously. I mean,
Hmm.
what were
Yes,
you
they
gonna do?
do. That's
What are
right.
you gonna do?
That's right. But that's the thing. You spend part of your time, especially in the cold of the winter. You come down to Florida,
Mm,
and you get
definitely.
so what's your long-term goal? I mean, you're obviously cash flow, making cash flow. You've been an investor for coming on now. You said 2012, so 13, 14 years now as a real estate investor. What's the ultimate goal you're trying to do, Phil? Like, what's that, 400 notes, or I want this much in cash flow, or what are you looking to accomplish?
Um, I mean, I've always been it's not like a dollar amount. It's more like I'm all about freedom. Like
Yeah.
doing what I want when I want, you know? And as long as I can do that and always gain a little bit of freedom, I don't wanna
Handcuff yourself.
I don't wanna handcuff myself. So it's been a great business. it's, you make your deal, and then you wait for your money. You have emails to answer, and you have to deal with lawyers. But I mean, I have a pretty decent system. I have a good team around me to help me deal with all those issues. But I'm getting through it. My goal, I want to set up my own fund, and like build on the experience that I've learned, the experience that I've gained over the years, and keep on learning. I love learning. I've always been. I've had great mentors, but I'm also auto. I learn on my own a lot.
Yeah.
So um.
Well, you're coachable. That's the thing, and
Well,
then you take action because here's the thing.
I wasn't always coachable.
I know. We all
When I
have.
was
You can be
young,
a
when
little
I was young,
stubborn.
I wouldn't hear any. I didn't want to hear anything about anybody. I wouldn't listen to my dad, my mom, nobody. The hockey coach, whoever, the teachers, forget it. But if I want, like, it's got to come from me. And this business, I love that business. I think it's the best business in the world. There's no better business for me, and that's not everybody's opinion, and that's fine. We need all sorts of people to make a world, right? But I just love the note investing business. It's always there's always something new to learn, and so it's a good challenge. It's a good challenge.
It's what I always say. It's one of the things where the lower your risk, the higher your return.
Mm,
Oftentimes, you know what I mean? When you look at some of the stuff where you're buying a non-performing note at a big discount, which
yeah,
lowers your risk, if they don't pay, you foreclose and you make a bunch. If they do start paying, great. It's a great cash flow, and you're
yeah.
not having to do a lot of work to get that cash flow on a monthly basis. But what I love about you two, Phil, is that you've pulled the trigger. A lot of people are
Oh yeah. Well,
educated,
and
learning,
that's
learning.
that's I think that's where my experience in Canada, like, because the first deal that I did in Canada, right, I was like, okay, that I was so stressed out, right?
Yeah.
Because it was a decent looking property. It was like 200 grand in 2019, and then the guy needed 50K. So I was like, okay, we checked out the property, the foundation, the roof, we looked inside, we talked to the guy, and he's still my client, like 6 years later. He's been, we've both been happy with this deal, and I still have him. I don't want to let him go. He's been great. He paid on time every month. I mean, but that deal, we were scared, and then my mom was there, and I was like, Mom, like, if we don't do this deal, like, might as well do another business, because then when are you gonna when are you gonna loan 50K and back by 200K? Like that's a no-brainer. Like, you have to stop being scared, and get your feet wet. And ever since it's been proven to have been a great decision.
Well, that's the great thing that I like about that is you learn, you calculate the risks, but you also look at the reward versus risks in a lot of
Yeah,
cases. Especially that's what I like about no business is if, you're buying at a great price, even the borrower doesn't pay or borrower files BK or you have to go to foreclosure, you're going to make money. It may not be like the
yeah,
quick, like 30-day, 60-day, 90-day quick hits like some folks do, but in today's world, most of the real estate deals are not happening in 90 days. You
no,
know, most of the fix and flips aren't happening in 6 months. It takes some time because of
yeah,
what's going on in the market, interest rates being a little bit higher on where they're at than
yeah.
they
You have
used
to
to. I
find your
mean,
buyer.
yeah,
Yeah.
exactly. I also like the fact that you were smart. You didn't just rely on the money that you had in your account. You went out and created your website. We put together your pitch decks. You started marketing that. You also started talking to your friends and family too, if I remember correctly. Some of your other investors that you've invested with stuff before too, correct? And started to get them kind of involved in funding some of your deals too, right?
Yeah, well, I have family friends that invested in my Canadian business, and I pay them their 12% every month. Like, it's been great. Yeah, we did like 5, 6 deals together. So yeah, but
Cool.
it's like I'm giving them free money. To
Yeah.
be honest, for an investor, no, to be honest, because
True.
because because it's worth 200 and you put in 50. I mean, you can't lose. It's like it's really is free money.
Yeah,
Like you don't have to work. You just have to wire it in and wait. That's all you've got to do.
yeah.
So for a passive investor that's got a capital to put to work, I mean, there's no better business.
Right. Now, I love too that some of the conversations that you and I've been having recently, and I know that you've been talking with our buddy Todd Billings, who's done a great job in helping
Yeah.
you put some things together for bigger things. And you've
Yeah.
talked about putting a fund together. So
Yeah.
let's talk about what your plan with that fund is. I know your plan is to raise a certain amount of money and then do what with that? Leverage it or go get lines of credit? Can you talk a little
Yeah.
about that next step that you're working through?
Well, the goal is to raise a $10 million structured note. So I'd have $10 million invested into my fund, and then using that $10 million, I go to the bank and I use it as equity to get a $25 million credit line. So I have $35 million to put to work. So I can take down the entire portfolio, so I can get even bigger discounts on the notes that I'm buying, and then I can just churn through the 200 notes or the 100 notes that I'm buying.
Well, but
And
it's also too, if you're getting the lines of credit, that's cheaper money. That
yep,
allows you to refinance out some of this more expensive investor money, right?
yep,
And increase your cash flow and
absolutely.
have that stuff available for
Yeah, I mean, at
bigger
this
deals.
point, it's just bigger numbers. You add a zero.
Exactly.
It's not much more work. You just do bigger deals. So those sub 100 grand deals, like forget it. Like I don't have time. Sorry. You know. So okay, sub 200 because you're even bigger. Okay, see ya. But then you can't get too big because then you compete with those really big hedge funds that want those juicy notes too.
Right. Let me ask you a question for those out there that say you can't find non-performing notes. Is that true or false?
And that's absolutely untrue. It's because you don't know where to look, or you're not looking. You think they're gonna fall in your inbox like doing nothing. Like you have to reach out to those guys. Like you have to be credible. You can't be wasting their time, and ask for notes and have no credibility. So I mean, you have to market your way out of the paper bag.
Well, that's true. I mean, that's the thing is it's just follow up. And I've had to remind you a couple times, okay, call
Yeah,
this guy again. And oh,
yeah.
yep, and because there's plenty of sources out
Yeah,
there.
they're busy. They're
Yep,
busy.
yep,
Like because these guys, they have 2, 3, 400 notes to deal with. So, I mean, you think you're the only guy that's emailing them for a tape? I mean, they've got to put the tape together. They don't
yep.
send you their whole portfolio and be like, So they have to build you out a tape. Yeah, so it takes a little bit of work on their end, but I mean, you have to be in you have to get back in there and then ask them.
Mhm.
It's
It's just that follow up. 80%
Yeah.
sales comes after
Oh
that. That
yeah. That job is a lot of follow up.
yeah.
Like that's the biggest part of the job. Like, okay, where
Mhm.
are we with this file? Where are we with this file? Where are we with this file? Okay, what's the problem? Okay, what do you need me to do? Okay, pay that account, pay this, pay that.
Yeah.
Keep the ball rolling.
Yeah.
Keep your lawyer motivated and plowing forward.
Now, you got two young kids, right?
Yeah.
How old are they?
I have a son that's 4.5 and a daughter that's 1.5.
So you're getting a lot of sleep at night, right?
Oh yeah, great sleep. Kidding. I mean, it's been the best last 5 years of my life for sleep wise.
Now, what's your wife? I mean, your wife did something before the kids. What did she do before you had kids?
She was a medical secretary,
Hmm. Hmm.
so but now she's taking care of my Canadian business.
There you go. Very good. So
Uh,
that's the thing. You guys both work together and
yeah,
aspects of it.
yeah, yeah. We have to. I
Yeah.
mean, somebody's got to take care of the kids while I'm out there hunting for notes.
There you go. There you go. Now you came to Austin for your one-on-one. We spent a couple of weeks together. You closed on a note
Beautiful
relatively
city.
quickly. Very beautiful city. My thing that sticks in my mind is when we were down at Black's Barbecue, and I brought that tray
Oh,
of meat.
that's a tray. That tray was like $300. I mean, there was a lot of meat on that tray. Wow, that was like the no joke. The beef rib was as big as my forearm. I mean,
You ate on that for like 3 days.
yeah. That was amazing.
Yeah. If somebody out there, because you've been through the training, you've been to the 2 days, so we continue to obviously follow up. We talk on a weekly
Yeah,
basis, at least once usually,
yeah,
which is good
yeah,
stuff. What
yeah.
would you say to somebody who might be thinking about sign up for our coaching or sign up just for the 3 day class? Because you took the 3 day class before ultimately sign up for the
Yeah.
workshop. Yeah.
I mean, your my philosophy is take action. If you don't take action, you'll never know. You'll never do anything. If you're scared, you don't want to get out of your comfort zone. Well, you will never achieve anything. You have to take a risk. You have to do something.
Yeah.
Like if you're paralyzed by analysis, I mean, then don't do this. Like you have to come on, let's go. Like you have to put your trust in. For my first note, I've put all my trust in you because I mean, like what else am I gonna do? Like
Right.
I don't know this business a lot. So I've had to trust you, and it's been a great deal.
Right.
So
Well, that's the great thing. We sat down and said, okay, here's what could go wrong. Here's
yeah,
why this does make sense. Let's
yeah,
look at the collateral file. I mean, there's been
yeah,
times, we still look at collateral files together, like, no, this is something you don't want to focus on. Let's get rid of it. Like that Tampa
yeah,
condo. We were like, nah, let's just get
yeah.
rid
Too
of it.
messy.
Too
Yeah,
messy and stuff like that. But you did take action.
yeah.
Is the 3 day class enough to kind of get you started a little bit out there?
Absolutely not. Not for me.
Okay.
It wasn't for me. I mean, a 3 day. There's only so much. It's like a fire hose. I mean, how much water can you drink out of a fire hose? I mean,
Right.
I mean, yeah, you'll be wet, but it's yeah. Every week, have your meeting, learn a little bit more, prepare your questions, and get your answers, and that's how you learn. You can't learn everything in a 3 day class.
No, but
It's
you had the
impossible.
foundation. Yeah, you had the foundation
And
for
and
it, stuff
even
like that.
it's too complex of a business to really get to it. Well, if you want to take 10 years on your own to learn a business, then take the 3 day class and make 1,000 mistakes and buy in New York and and figure it out on your own. But
Okay.
if you want, it's all about saving time. Like time is money. So yeah, okay. Like yeah, your class was 20 something. I
Mhm.
don't remember. And but it was well worth it, like
You've made your money back exponentially on that, is
oh,
what you're
of
saying.
course, of course, because that knowledge is with me forever now.
Yeah.
Like,
Yeah.
so it's there's
Now,
always more to learn too.
right. Now, I don't remember, how did you come across me? Was it YouTube videos? Was it referral? Was it the podcast? Do you remember initially by any chance? I know it's been a while, but
No, I'll probably Google node investing.
okay. That's probably
Yeah,
what it was. Yeah.
yeah,
Good stuff. Good stuff. Now, what's your goal for the rest of the year? You were sitting here, halfway through March,
yeah. Well,
basically
I want
here.
to raise my 10 million bucks. That's
There you
that's
go.
what I want to do, and then get that credit line so I can put it to work.
Yeah. Yeah.
Yeah, that's where I'm going. I mean, we're in March. Yeah, yeah. By the end of the year, for sure, I have my 10 million bucks.
I
I
don't
know
doubt
it.
it. I
I
don't
know it.
doubt it for a second. Yeah, exactly.
Yeah.
Yeah. Now you've been using the VAs too to help with some of the
No, I've
marketing.
let I've let them go.
Oh, you let
I've,
them go.
I've
Okay.
yeah, I've used them to get my SDRA investors, but then
Yeah.
I looked at the way he was working, and he wasn't diligent. Like
Okay.
you can tell when, because I can see his screen. I don't think he knew I could see his screen, but I mean he wasn't doing a really
Was
good
he?
job.
So you were having them work
He
at the
was
same time,
because but
or
I
you
could
were?
see because he would work, type, and then nothing happened for 15 minutes, and then he starts the mouse starts moving again, like back and forth, and then 15 minutes later, come on, like it's
So you were
okay.
using a software to track that. What kind of software? Thing were you using to track work?
It was a time doctor.
Time Doctor. Oh, that's cool. Very nice. I
Yeah,
like that.
yeah.
Very good because it's worth it. I mean, you got to track if you're hiring someone, making sure they're working.
How do you know if they're productive or not? You know,
Exactly. Exactly.
so
But how many? You said they pulled a list of IRA investors for you, though. How many did they
yes,
pull
sir.
so far?
1,200.
Very nice. That's a lot. That's a
Yeah.
lot. That's good. You should be able to,
Yeah.
to raise $10 million. Because if you figured even
Well,
12,
and it's the Floridian investors, so they're that old money, right?
yeah, yeah,
The
yeah,
God's
yeah.
waiting room, but hey, they have a lot of money.
1,200 IRA. Let's just say if you do 0.04, so you get 48 people out of that, an average of $150,000 a piece on kind of what they have. Yeah, that's a good chunk towards your 10 million. That's about 7.2 million just off that. But I think you'll do better,
Yeah, with my own
obviously, the
money,
more you
I can.
follow it. Yeah,
I'm. Yeah, with my own money, I'm right there. So
yeah. There you go.
there you go.
I love it, man. I get more joy. That's why I was telling Steph and I had a great. We enjoyed you down here. We got to get you
Yeah.
back down here at some
Yeah, I
point.
want to
Yeah,
come
get
back. I want to come back and go. The restaurant was such a nice place. Like the view, the sunset. I want to bring
hmm
my wife and my kids.
The
That'd be
we took them
nice.
out to the Oasis on Lake Travis here. Yeah, it was
Yeah,
just a
yeah.
beautiful, beautiful
Oh yeah,
sunset, quiet. Um,
beautiful.
yeah, definitely, it's a good time. We'll have to do. We'll definitely maybe next time we have you come down, we'll have more folks, or maybe we'll do a mastermind event and have you come
Okay,
down,
that'd be
and
cool. Yeah,
that would
yeah,
be fun. Yeah, definitely.
yeah,
So, but Phil, we are
yeah.
very proud of you. If you didn't know this already, I'm very proud of what
Thank
you
you.
do. Always
Well,
glad to talk with you.
yeah. I mean, I that's it. I try to have a good attitude and like you said, be coachable because it's been a weakness of mine. But that's how you learn, right?
Yeah,
But when I want to do something, I go for it. I go get it.
yeah.
So I
What's your
think it's working out.
It is. Besides real estate investing and business stuff like that, what's your favorite thing to do when you're not investing or nuts, when you've got some time to yourself for a little while?
I like to ride my motorcycle. That's what I love. Working on it. It's like going
What
for a
what,
ride. That's what
what
I
kind
enjoy.
for all our friends out there with motorcycles, what kind of motorcycle do you have?
It's a 2021 Harley Davidson Fat Bob.
Very nice.
Yeah.
Very nice. You need to take a picture of you on the bike and have that on your LinkedIn. You'd probably raise some capital from Harley
You
owners. You know what I
think?
mean?
You
I know
think?
you would. Yeah. We got a place here in Austin or south of Austin where I worked at. We didn't have time when you were down the first time. But there's a place, there's a little historic district called Green Hall. It's Texas' oldest dance hall. Okay.
Okay.
And I work down there on the weekends. It's a big tourist area. They got the Guadalupe River where people come to go tube the river, and they get all these antique shops and a little winery, stuff like that. But on Saturday and Sunday, every Saturday, Sunday during the summers, it's all lined up with motorcycles almost the entire time. But
Nice.
it's not like guys in a gang. It's all like dentists,
Yeah.
doctors, people
Yeah.
sitting around in their chaps drinking a cold Lone Star beer or a Shiner Bock
Yeah.
and having
I
fun
mean
out
the
there.
the 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 sound of the Harley is just intoxicating. It's
Yeah. Yeah, it is. Yeah, it
I
is.
mean not
Well,
everybody likes it, but I do.
oh no, there's nothing. There is nothing. It's much better than a rice rocket, basically,
Oh yeah. Yeah,
for
yeah.
sure. Yeah,
Yeah.
that's good
It's
stuff there.
yeah.
Well, good stuff. Well, Phil, like I said, we're proud of you. We're so glad at the success you're having. And the continued success we know you're going to have because you're kicking
Yeah.
butt and taking names out there. So, what's the best way for those listening here, whether in Canada, the United States, or somewhere else, or even folks looking maybe to invest here with you? What's the best way for people to reach out and connect with you, Phil?
Yeah, well, I have my website. It's my company's name is Colossus Strategic Holdings, and my website is cshlp.net. So you can reach out to me through my website, or you can email me directly, phil, phil.b, like Bravo, at cshlp.net.
Awesome. We'll put your website and we'll also put your LinkedIn profile link in the show description
Yeah,
so
we'll
people can
do a
reach out
little
to
bit
there.
of editing.
There you go. Yeah, no problem. Phil, what you got planned for the rest of the day?
Oh, keep working on my notes now because we've been talking. I can't answer my emails. So
Well, I'll let you go so you can
hey,
get back to
hey,
get back to
yeah.
work, buddy.
Let me check. Let me check. Yeah. Oh yeah. Oh yeah. I just made 10 grand.
I love that. I love that. That's good stuff there. Being on the podcast, I said make you some money. All right. Well,
All right,
thanks so
buddy.
much for being on here. Appreciate it, Phil. So that'll wrap it up for this episode, guys. One of the great things about what we do is helping folks dive in. Phil was successful before us. He's going to be successful after us, but he's learned something new. He's taken advantage of the opportunity and really diving in. And if you're here in the United States struggling, just think about other people that see the opportunity here in the United States. If it's a great deal, it's a decent deal, you're going to learn more by pulling that trigger the first time. If you're trying to learn everything A to Z, all the nuts and bolts before you pull the trigger, you're never going to find success, and you're going to suffer from overanalysis process. So go out, anything I can tell you to do, go out, take action, make your first offer, and get rock and rolling. You learn more by doing than learning. So go out, take some action, buddy, and we'll see you at the top. Thanks.
Bye-bye.
Hey, real estate note investors. This is Scott Carson, the note guy, and I've been an active real estate investor for over 20 years. And for the past 15 years, me and my students have relied on one company to help protect our assets and also help to create our LLCs and different entities and business formations and our asset protection to make sure that we're protected and aren't violating the corporate veil. What company is that? That's Laughlin and Associates here. They're out of Reno, Nevada. Huge fan of what they do and the customer service that they provide, not only me, but to my students, not only across the country, but across the world, especially for those looking to start businesses here in the United States, whether you're from Mexico, Canada, overseas. One company you want to reach out to is Laughlin and Associates. Aaron Young has owned this company for quite a few years. Laughlin has been around for over 50 years, and it's really the number one place for you to set up your LLCs through the Nevada LLCs or Wyoming or Delaware Limited Trust. They're just an amazing company to not only create your LLCs, but also follow up with the regular bookkeeping that you need to make sure that that corporate veil surrounds your business and keeps you safe from ne'er-do-wellers. All right. And like I said, I have been a huge fan of them. We've used them for every LLC, every entity we use, and they do just an amazing job in answering questions and helping to set up also our future, our estate, our Rockefeller plan, our asset protection plan, not only now, but as we evolve and grow more wealth and more assets. Laughlin Associates is always there to help answer our questions and help structure the things to keep our assets safe. Don't you want to keep everything you've worked for, whether it's your business, your real estate, your investments, safe and sound from the folks out there trying to take you down a notch? Well, make sure you talk to the team over at Laughlin Associates. You can schedule a free phone call at 1-800-648-0966. That's 1-800-648-0966. Tell them that Scott Carson sent you, and they'll take good care of you. Or check them out at laughlinusa.com. That's laughlinusa.com. Trust me, that's one phone call, one meeting you will never regret. Hey, real estate investors, this is Scott Carson. I'm known across the country as the note guy, and I've been an active note investor focused primarily on the niche of non-performing notes, distressed mortgage notes, and residential commercial properties for almost 20 years now. My company is WeCloseNotes.com. And I know there's a lot of different things when it comes to the note world. Are you buying performing notes? Are you buying owner finance notes? Are you buying institutional debt like I would focus on? Are you buying first, seconds, contract for deeds? There's a lot of questions. And it can be very confusing about what you can or cannot do. So one of the great things that we've hosted for the last couple of years that we do on just about a regular monthly basis is we host our one-day class called Note Weekend. If you go to noteweekend.com, you can register for our free 3.5-hour class. We'll talk to you and share with you how you find, fund, and flip non-performing notes. And yes, you can buy non-performing notes from banks, hedge funds, and a variety of different hard money lenders out there for your own portfolio. No, you don't have to have millions of dollars to dive into the non-performing note game. We've got students that have bought plenty of deals with 25, 30 grand, getting their ball rolling, using their self-directed IRA, who are tired of dealing with toilets, tenants, trash outs, tired of battling contractors and GCs to get properties rehabbed. We all know the market is changing. And while it may not be like 2008, 9, and 10 again, we do see a lot of distressed debt out there on both the residential and the commercial side. So if you're thinking about diving into the note game, becoming a note investor, a lien lord, as you like to say, versus a landlord, or you just want to figure out what it is about the sexy side of real estate in the note space, well, check it out, noteweekend.com. Doesn't cost you anything. We host it live, usually the first or second Saturday of each month. You can go today, register at the website, noteweekend.com, register for the next live class that we host. You'll get sent a replay of the previous class so you can start learning about the note business today. No questions asked, no credit card needed. This is a great way for you to dip your toes in the water and see if it's warm, because I guarantee going through our one-day class, you want to dive into the deep end and become a note investor. So check it out, noteweekend.com. You can also go to our website, WeCloseNotes.com. Check out our podcast. Check out our #1 YouTube channel. We are here to help support you. Whether you're an experienced investor or you're brand new to investing, Note Weekend is a great place for you to get the ball rolling. People often say we cover more in our 3-hour class than most people cover in their 3-day class. So check it out. Love to have you be part of our Note family, but get signed up today at noteweekend.com. Thanks and have a great day.